Remember, for those of you who are new, if you want to send a question trading related, you email stockhavenclassroom@gmail.com before 5 p.m. Eastern. And if you want to have me give you my thoughts on a particular stock chart, you email stockhavencharts@gmail.com between 2 p.m. Eastern and 5 p.m. Eastern. So with that, we'll go ahead and get started. So first question I'm going to take, I'll copy and paste it here, is how do you know when to cut losses or be patient and ride it out on a stock? It's a terrible feeling selling at the low only to watch it go back up later in the day. This, I can tell, is a question that came from one of our newer members, and that's all well and good. And the reason I know that is because we've addressed this before as far as how you know what to do. And there's actually a good discussion we had yesterday in our big board chat room. So what would some of the people here who have been with us before, what would you expect one of my first kind of themes to be to an answer like this? Right. First thing, gotta have a plan, okay? How you know what to do is based on what you planned on doing in the first place, okay? If it's Friday comes around and you haven't talked to any friends all week, right? The first friend who calls you Friday night, you're probably just going to go do what that person wants to do, right? And you'll just maybe see where the night takes you, see how you feel, all right? But if you're like me and you like knowing what you're going to be doing on Friday, on Monday, you have a plan, okay? And your Friday night kind of has already established itself. Trading is very similar in that you should know what you're going to do before you actually do it, okay? And this is going to be based on a few things. First of all, there's 3 kind of key words that I think of when I think about a plan, okay? Those are positive. This would be an outcome that is in your favor, i.e., the stock rises, you take profits, okay? Negative, an outcome that is not in your favor, i.e., a stock falls, you take losses. And the third one, which is the one most people do not consider, is neutral. An outcome that is relatively unchanged. Therefore, you must decide how long you are willing to wait for a change, be it positive or negative, okay? Now, these 3 things they stem from what I think is the right in line with having a plan, and it's a word that starts with an E that you hear me use all the time. Somebody wants to say it. Right. What is your expectation? Okay. It's easy to say my expectation is to make money, but how are you going to make money? If I buy it here, what is your expectation for the positive outcome, the negative outcome, and the neutral outcome? Okay. So without citing a specific stock, I'll talk in broad examples. So before I buy a stock, I run through a couple scenarios in my head. I'll say, if I buy at point A, or let's say price A, I expect the stock to bounce or to move to price C, at which I will take profits. However, if the stock moves to price B, I will take a loss. Okay? That right there is a plan. Okay? You buy a stock because you are expecting it to make you money. That's, normally why you buy things, unless you're just trying to lose money. I don't know why anybody would be doing that. So this question really, at the core of this question is, what is your expectation for the trade, and what is your plan in case that expectation is positive, negative, or neutral? So in the event that your expectation results in something positive, then you have to have had a plan to take profits at that certain price. Okay? We call that, like Chalk said, a target. Okay? What is your target? What's your profit target? What is your stop loss target? Your stop loss, this could be 5%, it could be 10%, it could be $500, it could be $1,000, it could be, a key support level, or where you deem a key support level to be, etc. This is where you really get to experience the uniqueness of trading and learn about yourself as a trader, is with these expectations. If you don't have your own expectations, you can't learn your own style. It's like not owning your own clothes, and all you do is wear your friends' clothes. All you're doing is taking their style, okay? But it's not actually yours. You're just trying to copy it. Do your own shopping. Get your own clothes. That's how my mind works when it comes to trading. We're all going to see different things, and we're all going to experience different things. We're all going to have different expectations. We're all going to be able to handle different levels of profits and losses. $1,000 to some of us is not going to be a lot. It's going to be 6 months worth of expenses to others, okay? $500 loss is not going to be a lot to some of us. To others, it's going to mean, not being able to go out for 3 months, all right? So that's why trading is so cool, because everybody's experience is different, which is why your expectation and your plan is so important, because it is your own. So the first step with this is, how do you know when to cut losses or to be patient and ride it out? How you know is because you have already come up with the criteria for doing so. Again, when I say that, I'm talking about your expectations and your plan, etc. Okay? And as far as it's a terrible feeling selling at the low only to watch it go back up later in the day, yeah, it is a terrible feeling. And there's nothing you can do about that feeling other than learn from it. Okay? There's a couple different things people do after this. Because this is something that happens, or maybe you don't sell at the low, but maybe you sell at your target, and then the stock rallies another, 200, 300%. There's a couple ways to deal with this. You can think about it, and you can be sick to your stomach, and you can say, oh, next time I'm going to hold or next time I'm not going to sell, okay? Or you could log into your account, look at your entry, look at the time you entered and the time you sold, take that time, pull up a chart, match everything up, and evaluate further, did I miss something? Was there something in the supply demand on the chart that I did not see at the time, maybe because I was being too emotional? Or did I not have a plan in the first place? Or did I have a plan, but I did not stick to my plan? That's what I find to be the most common, okay? How many of you, and be honest with yourself, you don't have to answer, how many of you, when the trading day's over, you don't look at your trades for the day? You don't look at what time you bought. You don't look at what time you sold, okay? Chalk, that'd be a good question to send in for a class I'll do next week. All right? Again, and Chalk, what you're speaking on is your plan. I mean, that type of question is going to be, you know, are we cutting losses on a penny stock or a big board stock or an option? It doesn't matter. It all comes down to what your plan is and, you know, how you executed that plan. And then after you execute, you have to review. And it is in your review process that you will see if you made a good trade. Because remember, good trades aren't measured by how much money you made. You hear the saying, you know, players are made in the off season when it comes to sports. Well, I like to say traders make their money when the market's closed. I haven't made that much money over the last few weeks relative to earlier in the year because not because I haven't been around as much during the day, but because I haven't been putting as much time in when the market's closed, reviewing my trades. You need to review your trades. You need to print them out, match up the times, and look at them, okay? GLD was was a play we called out in the big board room, and we called out a target of 160 earlier in the week. GLD hit that target of 160 yesterday. Well, if you took profits yesterday, you made a couple 100% on the options that we had been playing. Now, sure enough, it was up again today. You know, that doesn't mean you should feel sick about missing out on extra profits. What it means is maybe you could look back and come up with a different plan and say, well, if GLD closes above 160, now I'm going to have a new expectation that it can target 162. You know, if GLD closes above 160 on volume of greater than 12 million shares because it hadn't done that in 2 months, you know, then I'm going to get even more bullish. You know, and that's the type of stuff you'll realize when you're reviewing. Okay? If you get nothing else out of this question, remember these 3 words: expectations, plan, review. Okay. This next question I'm not going to spend a ton of time on just because we literally have so many videos on it. And it's in regards to the spread, the term the spread, and the term dilution. So, guys, please, especially the person who asked this question, please bookmark this link. These links that I'm pasting. These are all videos that have a lot of good information on how to recognize dilution, what dilution is, how it's going to impact a stock, if it's good or bad, etc. We have done numerous videos on dilution, so I'm not going to spend that much time talking about it. All of the above videos related to dilution. All right. So dilution, first of all, is when the outstanding share count, meaning the amount of shares that are available, is increased. So we have three types. We have three key ingredients to a share structure: the authorized shares, the outstanding shares, and the float. Okay? The AS, authorized shares, the maximum amount of shares that the company can issue. The OS, the outstanding shares, the amount of shares currently issued. And the float, which is most important in my opinion when it comes to penny stocks, the amount of shares that can be freely traded. So, the first thing you should know is that the outstanding shares and the float, very, very different numbers. Okay? So you can have 100 million shares outstanding, but if 80 million shares of those are held restricted by the CEO, then how many shares do we actually have in the float? 100 million shares outstanding, of which 80 million shares are held on restriction by insiders. Yes. Not 20%. Well, I guess it is 20%. But think about things in terms of the actual number itself. 20 million shares are in the float. So from a supply and demand perspective, that means the total supply of shares available to trade right now is 20 million. So if the float is 20 million at a penny, we're talking $200,000. That's not a lot of money. If the float is 20 million at $1, though, that's $20 million. That's a decent amount of money. Okay? So it's all relative. Now, you have to be able to recognize when dilution might be coming. Excuse me. First, I need to explain float dilution. Many times in penny stocks, what you have is float dilution. So, what is dilution? Dilution is when the amount of outstanding shares is increased, thus devaluing every pre-existing share that is currently out there. Yes, this is being recorded. Okay, so that's dilution. Now, who wants to guess what quote-unquote float dilution is? Try again. That's a question that would be best asked by sending an email to Stockhaven Classroom at gmail.com, the date of the next class, which I'll announce next week. So who wants to take a guess at what float dilution is? And why it's so important to understand? Yes. Those are all pretty sound answers. So float dilution, that's the best one, what Ali said. Unrestricted shares become available to start trading, just like Facebook. Just like Facebook. Okay? So like Facebook, the last few days, so like this big volume here, This was not dilution. The outstanding shares did not change on Facebook. What changed was the shares in the float. The float got increased. Why is it so important to be aware of when float dilution might occur? Think about supply and demand. Exactly. The supply of shares available becomes greater. And there's only one way to deal with increased supply, and that's increased demand. Okay? So many times in penny stocks, it's not necessarily dilution, although it does happen, but it's float dilution. Okay? And these videos that I linked in, I linked in 5 videos. I promise you, each video will show you something very, very useful in terms of dilution, be it from level 2, be it from a chart, be it from a SEC filing. So if you don't understand dilution or you want to better your understanding of it, please watch these videos. And if you still have questions, then send out another question. Send me another email. Okay, so that's that. Now as for the spread, I have a video on the spread, kind of, but it's not nearly as good as all the videos we have for dilution. So what is the spread? Spread is the fixed amount between a bid and an ask. So let's do some examples. Bid is 0125, ask is 013. What is the spread here? Yes, 005. So that is our spread right there. Now, would we consider that a big spread or a small spread? Or a tight spread or a small spread? So everybody's saying small for the most part? Well, it's 4%. It's a 4% spread. So now that we think about it in terms of percents, does that change if we think it's big, small, medium? Yeah, I would say it's an average spread for a low price stock like that. Okay. Let's say 11 by 12. The spread there is obviously a penny. So would we say that's a big spread or a small spread? That's a wide spread to me. That's a 9% spread, guys. You could buy it at 11 cents and sell it at 12 cents. That's a big spread, in my opinion. Okay, and I'm going to explain my thoughts as to why it's big or small in a moment. But let's do some more of this. 55 by 58. Is that big or small? Yeah, that's about 5% spread. So I'd say that's average. You know, it's not great. It's not terrible. All right. 22.5 by 23. What would we say there? Yeah, I'd say that's small, that's nice. It's a nice tight spread. 2%, that's good. We can work with that. Okay? Think about what we've seen on NEOM the last few days. Have we seen a nice spread? Have we seen a tight spread or a wide spread on NEOM? This is important, guys. I don't care what the stock has done. This is very, very important. So JB says a wide spread. Anybody disagree? Agree? Yeah, I think we've seen a as small of a spread as you can get on NEOM. I mean, I've seen 101 by 102, 148 by 149. I mean, those are very, very small spreads. Okay, on the way up and on the way down, the spread stayed really, really tight. I think at one point the spread got bad and it was like 117 by 012, and that was a quote unquote bad spread for what we had seen. Now, let's keep thinking about NEOM. So we had a very, very small spread. And Penny's just said because it was very liquid. Now, did we have a very small spread because it was very liquid? Or was it very liquid because we had a very small spread? Think about that. Right. It does work both ways. And this is why understanding spreads are so important. Think about what I talked about as far as having a plan. Okay? If you see a stock like NEOM or another stock, and you say to yourself, okay, I'm going to buy it at the ask, but if I have to sell it at the bid, where am I going to have to sell it at? Okay. Would you rather buy a stock that has a bid close to where you're buying it so you know that your losses can be kept minimal? Or would you rather buy a stock where the next bid isn't for 5 cents below yours? And then you're going to have to, whack it. Right. The closer, the better, because the closer means the more specific of a plan you can make, right? It's kind of like more options. The closer a spread is, the more options you can have for your trade, because you know that there's buyers, or you can sell into the bid relatively easily if you have to take a loss. So what that does is that gives you confidence to then actually trade the stock and not be afraid to hit the ask. If you see a stock with a spread of 10%, you're not going to want to hit the ask, because God forbid you have to then take a loss right away. Who knows? Now you're taking a 10% loss right away. NEOM, you guys know I took a loss on NEOM yesterday, but it was like a 6% loss because it was very, very easy to just get out. It was very liquid. The spread was very tight. So I was able to keep buying and buying and buying, which turned out to not work out. But my loss, I was able to buy with that confidence because I knew that if I was going to take a loss, it'd be very easy and I'd be able to sell into the bid very easily. Okay? If you took that big of a loss on NEOM, you were emotional and you chased. It's that simple. If you took that big of a loss, it means you didn't buy when we were recommending to be buying. NEOM was a great setup that first day, and then gapped and ran that next day. So, but and if you didn't look at pattern day trading, then you know what your mistake was, and that's easy to correct. That's just an awareness thing. But anyways, so spreads are very important because the closer the spread, the more confidence you can trade with, and the more confidence you can trade with means the more confidence other people can trade with. And what that usually leads to, like Penny said, is liquidity. So the two questions I asked is, what I said was NEOM liquid because it had a tight spread, or did it have a tight spread because it was liquid? They're kind of one and the same. You can't have one without the other, really. All right? Think about VLNX. On that first day that VLNX was running, did we see a really tight spread or a really wide spread? Yep, tight spread. And think about all the liquidity it had. Great trading opportunities come from liquidity. It's why I'm always telling you guys, go where the liquidity is. BBDA, tight spreads? I'm eating carrots. We had tight spread on BBDA. Tight spread on GYST. When did, let's take a look at this. When did BBDA start going down early? Look at this chart. Look at BBDA right here. What do we notice about these 2 days? August 20th and 17th. Lower volume. Let's put it another way, Hokie. Lower liquidity. The liquidity dropped off. That was your first sign that BBDA was maybe in trouble, was the liquidity drop off. Yes, you want to see volume drop off on pullbacks, but remember, when it comes to guessing and hoping, you don't want to be caught holding the stock after it's made this move and the liquidity starts to dry up. Because as soon as the liquidity starts to dry up, that's the market telling you, woohoo, we're not as interested in this one anymore. All right? And when that happens, liquidity dries up. And what's going to happen to the spread when liquidity dries up? What do we expect to happen to spreads when liquidity dries up? Yes, they're going to widen. And when the spread widens, we can't trade with as much confidence. When people can't trade with as much confidence, they get scared. When people get scared, they get out. When everybody gets scared and gets out at the same time, let me show you what happens. Yeah, not cool. Now, yesterday, who watched BBDA? Who was watching BBDA yesterday on this huge volume here? Eric was watching. Eric, how was the spread yesterday on BBDA? I watched it too. The spread was really big going down, but once it kind of stabilized, the spread got kind of nice, actually, and it was quite tradable. Why? Because it was liquid. Liquidity attracts traders. Why? Because people with big portfolios who can't often play these penny stocks because they're not liquid enough, their eyes light up. I can tell you, even though I took a loss on NEOM yesterday, I still made really good money off of it because I see how much liquidity it's trading, and it's like, man, I can go in this thing with 30 G's, pull it out very easily, make 15%, and that's, that's a week's worth of work for some people. All right. That's why I'm always telling you guys, follow the liquidity, because liquidity is what's going to attract the big money players, because they know they can get in and out very easily. All right. So hopefully everybody's gotten something out of that conversation relative to the spread. The spread is very important that you understand what is the spread exactly. The spread, do not think about the spread in terms of pennies. Think about it in terms of percentages. And be very, very observant when the spread starts to widen, especially after a stock has made a big move. Also be very observant when the spread starts to tighten after a big move lower, because that's your first sign of a bounce. Okay? Again, we have videos on that as well at our trading university. Last question, and that was a good question relative to the spread. And just a rule of thumb, guys, if it looks like a wide spread, it's probably a wide spread. If it looks like a small spread, it's probably a small spread. If you don't know, get out your calculator. Figure it out. All right. What are the factors that make it hard to fill an order on a highly liquid stock? Many times I'm caught chasing the ask higher even as I bid above the ask and I still do not get filled. Are there any other brokers in particular who offer better fills? Well, the first factor is how many orders were placed before yours. Okay? How many orders were placed before yours, and which market maker is doing most of the selling? Okay? If ETRF is a main seller on ask, who do you think is going to have an easier time getting filled when they're trying to hit the ask? Knight or E-Trade? Right, exactly. Okay? If Knight is on the ask and your market maker uses Knight, you're going to have an easier time getting filled with Knight. Okay? If you're trying to buy from Knight with an E-Trade account on a highly liquid stock that's moving really fast, you're going to have some trouble. So you can, there are two brokers, Broad Street and Speed Trader, and maybe Sure Trader even. I know Speed Trader for sure. They allow you to choose which broker, which market maker you're routing through. Okay? Some full service brokers, I have an account at Merrill Lynch, I'm also able to choose I'm able to choose between like 5 different market makers. I don't have access to all of them. But so it's much easier. If you see that auto is the main seller and you have the ability to route your buy order through auto, then you'll have an easier time getting filled. Okay? That's usually the main thing is which market maker's doing the main selling. It's why I always say identify who's running the show. I think Sage D. Who remembers which market maker was running Sage D? It was pretty in control. It was CSTI. All right. So it's like you want to pay attention to that, because if CSTI moves off and other market makers come down, then you might have an easier time getting filled or something. JB, I know that Broad Street people have liked them, and I know Speed Trader people have liked them too. So those would be the two I would look into. Guys, this is just something that comes with the territory in playing penny stocks. You want to have the ability to make 100% in 20 minutes with some of these piece of shit penny stocks. Well, you need to understand that you're not always going to get filled, and sometimes you're going to get filled at the top, and God only knows. The things I would avoid in situations like this, and this is tricky, is I would avoid using market orders. Now, what you need to know about that advice is when it comes to buying, who has preference? If you use a limit order versus a market order, the SEC stipulates, no, that's incorrect. Market order has preference. Market order has first right over a limit order. Okay? So, some people might get filled quicker because they're using market orders. Now, the reason I say avoid using market orders is because now you're at the mercy of the market maker and wherever they want to fill you. And, it's just not a situation I like putting myself in. I like being in control of where I'm buying. And if I can't buy where I want to buy, then screw it. All right, let's get to some charts. First one is SCVL, Shoe Carnival. Well, seems to be a bull market in shoes, judging by this chart. However, we have something here today. We have the highest volume on a down day since November 18th, 2011. So second highest volume on a down day in a year. Second highest volume on a down day in 2 years. And it's coming at the top of a move. However, the price was relatively flat. All right. Didn't really sell off. Got 4 higher lows in a row, or 5 higher lows in a row, 5 higher highs in a row. Actually, you've got 7 higher highs and higher lows in a row. Very nice volume pattern until today, really. Looking at the long-term chart, you can see it just passed its all-time high. So what I want to see, you've kind of got this zone up here from this high back here in 2006 around 1950. So 1950 up to 2350 from a long-term perspective is an area where, the chart told us expect some supply up here. And you can see that. In April 2010, it approached that level, sold off. December 2010 approached that level, sold off. July 2011 moved into that level, sold off. But now, here we are, 2012 was able to establish itself in this level and push forward. It's now traded higher 4 months in a row. That's the best. It hasn't traded higher 4 months in a row since October through January of 2005 through 2006. If you look at what happened following that period, it was quite bullish. The stock was around 16 at the time. It ended up hitting 2350 later the next year. So I mean, anytime the stock is able to move past an all-time high, that's great. Now the key is, can we establish some type of base in this previous range of supply? Now we want to see new demand. So what I'm going to look at, you see this high right here? I kind of want to see this range. It looks like it's between Really, even if you take these highs here, that's good. So it's between 20 and about 22. I would look to watch that level closely long term, in the intermediate term. Longer term, like I said, that 18 to 1950 level, watch that. Okay. Overall, though, this chart's in great shape. Very, very nice trend, especially recently. You know, moved to new highs, but you do have to be cautious of this volume spike right here because there's a lot of volume now that traded in this range that now we need the price to move above it in order to make these people feel good about the positions they took today. Because if it starts pulling back now and moving lower, now you're going to have everybody who bought today, they're going to be concerned and they might panic a little bit thinking they bought the top because this was an all-time high today. All right. So like I said, watch it. Your first red flag is going to be if it breaks this one of these higher lows that it's been making consistently. Long term, chart's in great shape. 1950 to 2350 is kind of a nice range to watch as that was the high in 2005, 2006. Let's see if it becomes a new base. Okay, and eventually this thing could easily push into the 30s in my opinion. In the immediate term, you have to be cautious of what this volume could potentially mean if the price starts to drift a little lower. Then, you know, we could go sideways. Yes, this will be posted on YouTube. Okay, Apple. So Apple, here we are again, another stock all-time highs, just absolute monstrous run. Now, what's interesting here? Apple faked a lot of people out. So this was the day of earnings. It missed earnings and the stock gapped down. A lot of selling that day. But what did you have to notice? What did you have to notice on Apple this day? You had to notice it. If you didn't, then you know you're not trading with an open enough mind. What did you have to notice on Apple? What am I looking for here? No, not volume. No, not about dropping intraday. Yes, stayed above previous support. Even though the volume was high, even though it was an earnings miss, even though there's all this drama, it held above this key low from June 28th. It held its June lows and it held its early May lows. So really, all it did was it put in a higher low. So this was a great risk-reward trade right here because you could take this and you could use this as your reference point. Remember I gave the example earlier in regards to, you know, saying I'm going to buy at price A and if it goes below price B, I'll sell. Well, here's price A, here was price B, okay? This is a great trade. This is a great expectation type trade because you could have said, I'm going to buy here and if Apple stays above this key low here, I will expect a bounce higher. Maybe back to filling this gap towards 600, okay? Something like that. So, you know, I just wanted to point that out with Apple because then obviously, I mean, just look at this absolute sick rip here, okay? Now, yesterday you had a lot of volume, 2 days ago you had second highest volume on a down day since, you know, late April. We're at all-time highs. There's a big, big difference, though, between this move to all-time highs and the subsequent pullback and this right here. What's the main difference, guys? I know Pennies is going to be all over this one. Yes, volume. Volume is much lower. Here's where it gets tricky and where trading gets unique. Do we like that volume is lower? Or do we not like it? What are we interpreting about volume being lower up here? But this hokey, this wasn't lower volume on a pullback. This was lower volume on a move to all-time highs. If you take the volume, if we look at 150-day, it's more clear. I mean, guys, Apple in February, when it made its move up to all-time highs, this thing was fucking trading 35, 40 million shares a day. I mean, that's insane. Now, if we just look at the average volume line, well, that's just not accurate. Why is it putting price line up there? If we look at the average volume line from February 17th through April 25th, so for 3 months, the average volume stayed above 25 million just about. Here we are now, the average volume hasn't even cracked above 20 million. So it's not lower volume on a pullback, it's lower volume on a move towards. Okay, so this is good. We're getting different answers. So Guest said something that's very important. He said not as much demand here. That's true. But my question to Guest would be, do we expect there to be more demand up here, or do we expect there to be more supply up here? What would we expect? Exactly. What we would expect is more supply. However, because the price has been able to move to all-time highs, what does that tell us about the supply-demand ratio right now? Right. There's less supply. So Guest is correct. Guest is correct in that saying the low volume move to all-time highs represents less demand, but my counterpoint would be, but that's what we expect when we approach all-time highs. We expect there to be less demand. And also what we expect is we expect more supply, but we haven't really gotten that. Our highest volume spikes here have been 29 million shares and 31 million shares. This thing traded 30 million shares per day for like 9 days in a row. So, you know, to me, it's actually bullish that it's been able to make this move on low volume, because we've approached an area where you would expect high supply and we haven't gotten that. However, recently you do have to pay attention though, because the volume has gotten dramatic again. Okay. And so there's clearly a lot of shares changing hands here. So I wouldn't be surprised to see Apple maybe, I see some congestion over the last 150 days, and this is something I talked about way back. I said I wanted to see Apple kind of hold its gains. Really, I mean, you've got that wide channel, and then you've got kind of this channel here. Okay, you've got all Apple really did from April 2nd through, you know, August 1st was just go sideways within this mini channel right here, except for this 1 week move below it. Okay. So what I want to see, I want to see, is Apple establishing a new channel at which it can maybe go sideways again and then make another big move out of? Or, you know, it might fall back into the top end of this channel, which, let's see, the range on that, 620 to 644. So I don't want to see Apple go back below 620. There's no reason to me Apple should fall back into this range. But if it drops down to, say, 620, I'll tell you right now, people are going to be freaking out, right? Oh my God, Apple's tanking. When in reality, all that would be is an 8% pullback from 675 down to 620. Okay? It just made a move from 570 to 675. So that's a 105-point move. Okay? The midpoint of that is 52.5. So if you do 675 minus 52.5, you get 622.50. So that's pretty near that 620 area. So 620 to me on Apple for this, the intermediate term of this trend is really kind of a key range to me, 620 to 625. The farther north it stays above that range, then, you know, the stronger it will appear to be. And, you know, the more people will look for that 700 level to come soon. But high volume, high liquidity, a lot of volatility, you got to pay attention. Apple's kind of working itself out here. It's at a new level it's never been at before. We expect there to be high supply up here. And, you know, we're not seeing a tremendous amount of volume like we did in March and April. And to me, that's good. That is a positive. A low volume environment near all-time highs with the price holding well is favorable for Apple. Okay, let's talk from a day trading perspective since we've addressed kind of the long-term picture. So today's low, 661.15. That's your key low for tomorrow. 5-minute chart really sold off going into the close. Closed at its lowest level of the afternoon. If you look at the one-day 5-minute chart, you've got today's low of 661.15, and then you've got yesterday's afternoon low of 558.50. So I'd watch 558.50. If 558.50 breaks, my expectation would be for a retest of this low down here at 648. Okay, if it can kind of work its way back above that 655 level, we're going to target today's, you know, the afternoon high of 668. Above 668, we've got 670. Above 670, all-time high is right back in play. Let's look at the 60-minute chart. So real high volume up here. So I want to match the range I want to watch closest is the range at which the majority of the volume traded. As the 60-minute chart shows, that's these three candles right here. Boom, boom, boom. The range there is 557.50 up to 675. What's interesting about that 557.50 level is it's very close to the 558.50 level I just mentioned from yesterday. That was the afternoon low. Why do I pick the area at which the most volume traded? How come that's what I'm using to determine where I put my channels? Any guesses? Yes. Most buyers and sellers, you know, what guest said that will determine where supply and demand are. Yes, all good things. Most accurate representation of price. Why is it the most accurate representation? Well, it's like a poll, guys. The more people you poll, if you ask 10 people who's going to win the election, and 9 say Obama and 1 say Romney, okay, and you place your bets, you're not going to have as good of an indication as somebody who asks 100 people, okay? So using the highest amount of volume is like you're analyzing you're taking more respondents in the poll. If you use this volume down here or this volume down here, you know, there's not a lot of people in the poll, so it's going to be harder to place your bet. So that's why I'm choosing to put it where I put it. When in doubt, go with identifying the liquidity. Okay. ANR. This just doesn't look like a good chart to me. Beaten down, but what I do notice is the downtrend has stopped and it's started to just go sideways. It's essentially been trading flat since July 25th. Closed at, hit a high of 650, and you know, here it is. So, you know, we've got a nice channel here. And again, look where I'm placing it. Look where I'm placing the channel. I'm not actually choosing the lowest point. What am I choosing? Look, this is the lowest point. But that's not why I'm choosing that. How come? How come I'm going here instead of here to determine my channel? Yes, because that's where the most volume traded. So, nice channel here. Oops. The high here is 740, and the low here is 618. So that's our channel, guys. Just play the channel. It's just simply range bound. No reason to buy at $7. No reason to sell at 650. Buy it near 620. Sell it if it goes below it. Sell it near 740. Get aggressive on a breakout if it breaks above it. Okay? That's all you've got going on right now. The long-term chart suggests that this downtrend will continue. I mean, it's just fucking ugly. They're going to have to do a reverse split. But yeah, we do have a channel here, so we do have a setup. We can trade anything if there's some liquidity and there's reference points, and we've got reference points here. So that's pretty straightforward. Disney, beautiful chart. I was looking at this one a couple days ago, actually. Just a really kind of obnoxious uptrend. You want to tell me there's no computers here? Look at that. So risk reward on Disney is pretty good right here to me because it's hugging that trend line. So, you know, I would want to bet on the trend. However, what I will say is notice the bounces off of the trend line are getting weaker and weaker. And less time is going by in between touches. What I mean by that, here we moved off the trend line on June 5th, and we didn't come touch it again until July 12th. But then we came back July 24th and touched it. So only 12 days. And then August 3rd, August 2nd, so only 10 days. And now here we are again August 23rd. So, you know, 18 days or so went by. So the bounces are getting weaker and weaker, and the time that's elapsing is getting fewer and fewer. So want to be cautious up here because, again, this is near all-time highs. But from a long-term perspective on Disney, you had a very good breakout. When last year in 2011, and you broke above that again this year. Okay. That range is, you know, between 43 and 45. So from a longer term perspective, that's where I'd look at Disney is, you know, see if it doesn't approach that 45 level. Let's look at the weekly. This is what I'm talking about, these highs. And again, I choose those highs because that was an area of previous supply. So I want to see if an area of previous supply becomes a future area of demand. So that high was 44.34. So 44 to 45, long-term perspective, that's where I'd look, that's where Disney gets interesting to me. You know, certainly don't want to see it long-term drop back below 40. That wouldn't make much sense to me. And your most recent low, not only did Disney break below yesterday's low, it broke below its low of the last 2 days. It hasn't broken below its low of the last 2 days since the week of April 9th. Excuse me, on a weekly basis. This week's low is below the low of the last 2 weeks. It hasn't done that since April 9th, so that's a bit of a concern. However, when it did that the week of April 9th, look what it did. It rallied. So the most recent time it did it, it didn't end up affecting the chart. Okay. Daily low volume up here. Okay. Last week or so, we're below the average volume line. So we're at an area where we expect supply because we're at all-time highs, and we're not seeing high supply down days. So overall, that's another bullish sign. You know, you just want to watch, can it hold this 48 level even? If it does, there's a good chance what it needs to do is it needs to establish itself above 50, and if it can do that, then you'll have 52.50, then 55, 57.50, 60, etc., etc. Ah, someone had to do it, didn't you guys? VLNX. Here we go. Let's take the 15-minute or 5-minute chart. Well, first of all, this thing's a piece of shit. I mean, look at this huge, huge, huge dump, right? So first things first, what do we know? We know that there are a ton of bag holders in this stock. A ton. So, you know, yeah, it can bounce, but just be aware that every time it bounces, you're running into a brand new bag holder. Okay. Five-minute chart, you had really high volume here between 018 and 022. So that's where I'm going to put my key support for this move. Just like on the big board stock. It doesn't matter what the price is. We're always going to go where the most volume traded. And you can see that in the afternoon when it pulled back, it's at the top end of that range is where it happened to find support. Okay? So that's good. So watch that 2.2 range, and then watch today's high of 2.7. If we can break above 2.7, the next high would be right here around 3.2, 3.25. Above that, you've got these highs here at 3.5. It's not out of the question that it can bounce back to 5 cents. You're just going to need greater volume because look at all this volume. If we take a 30-minute chart of the last 3 days, look at all this volume right here that's kind of trapped, right? When it maybe looked like it was going to bounce. You had a ton of volume trade between 321, which makes sense that there would be resistance at 325, and 6 cents. So if you enter this channel, just be aware that there are a lot of people who are going to be trying to just break even and get out. All right. I don't want to, yes, there's good liquidity here so you can play, but just do not buy it and then go to work. Don't buy it and go to lunch. You know, I was so disgusted when I saw people talking about losing money and they said, well, I lost money because, you know, I bought it and then I went out. You know, it's like, what are you doing? That's, you have to, you're responsible then. You're putting yourself in a bad situation. Whether it's trading or in life or with family or religion or, anything. Do you want to put yourself in a good situation, or do you want to put yourself in a bad situation? That's what I always ask myself, no matter what I'm doing. I'm not talking about just my professional life. This goes for your personal life as well. The better situations you put yourself in on a personal level, you'll see that that will translate on a professional level as well, and vice versa. A lot of who I am as a trader, people who know me, both as a trader and as a friend personally, they will tell you that the same qualities and characteristics that show up in me as a trader are the same ones that are evident in myself as a person and the way I carry myself and the situations I strive to put myself in. So it's very important, if you're gonna do something like this that's been very volatile, that you're being responsible. BLVT. Okay. Awesome move yesterday. Today, not so much, but volume was much lower, and it had just gone from 0004 up to 0015, so it made like a 500% move. So a pullback was to be expected. Okay. Again, let's look at our volume. So the greatest amount of volume was between 0004 and 0005. But if we go to the 30-minute chart, we had some decent volume in this 001 to 0015 range. Now that's a wide range. That's 50%. But if you're going to play triple zeros, that's what you got to be open to. You have to be open to wide ranges. So, right here, this 001 and 0012, you can see it's channeling. So just watch today's low of 0009. I want to see it hold support at 001. And if it can break back above 0012, and really establish itself on increasing volume, then this high of 0017 is definitely going to be in play. And above that, there's not a lot of resistance. Even though you had a lot of volume trade back, even though the price was at much higher levels back here, the volume wasn't that great, so we don't give it as much emphasis. So keep this one on watch, and this is kind of one that I would be more comfortable playing day by day and taking it day by day as opposed to, swing trading it for a week and having a target. Have your target going into the day, have your criteria, and then based on what it does that day, then come up with your next target for the next day. It's not something that has a lot of history where you can, pick your reference points. So it's more difficult. All right, the last one is review is the last one. Review. After your trade, you have to review. Oh yeah, BVLT, definite dilution. That's a good observation. I mean, the reason we know it's dilution is because where's all this volume coming from? We don't know if it's float dilution or outstanding share dilution, but we know it's dilution. And in my video that I linked in, I will do it again. It's this one right here. This is a great video. In that video, I explain how you can recognize dilution simply from looking at a chart. Okay, and the last one is the Dow Transportation Index. Nobody requested this, but it's just different. It's a different indicator that I think is important to watch. Okay, $DJT is the symbol on E-Trade Pro. So the Dow Jones Transportation Index is a measure of a lot of transportation stocks, and I like following it because of our economy is kind of the transportation sector, and the shipping sector and stuff like that. It's a good barometer of economic health to me. And there's something that sticks out like a sore thumb to me when it comes to the transportation index relative to the S&P 500. Any observations? Yeah, lower highs. Specifically, so the market, the S&P 500 just moved to yearly highs. The Dow Jones Transportation Index did not. Not only did it not move above its May highs, it couldn't even get above its summer highs. Couldn't even get above its June highs or its May highs or anything. And again, if you look at it next to the Dow Jones, the actual Dow Jones index, you can see last year it was able to make new highs, but again it did the same thing where it wasn't able to break above its highs in mid-2011. You see how, so the Dow Jones Transportation Index is in the pink, okay? You see how it, right here, it actually wasn't able to break above this high even though the Dow Jones was. That ended up being somewhat of an omen because, you know, we all know what happened in the fall of 2011 with that huge crash, okay? And now here we are again. We have a similar setup where it wasn't able, the Dow was able to get above its 2011 highs, but the transportation index was not. So we had the Dow move to highs up here, transportation index did not. So just something to be aware of, especially if you're an investor. You know, some of you with your IRAs and your 401ks, you need to be aware of when different indicators might be flashing warning signs. And the Dow Jones Transportation Index, to me, is definitely flashing a warning sign here. The fact that it wasn't able to break above its summer highs and retest its highs for the year, even though the market did. So I want to watch this 5,000 level, this recent low from August, 5,016. Watch that, see if it can hold that. 5,200, notice how much it struggled with 5,200 all summer. Needs to establish itself above 5,200 before September rolls around, because if you know, the midpoint of September, if this thing starts cracking below 5,000, you will see the S&P 500 go towards 1,300. I guarantee it, okay? Trust me. So pay attention to this. All right, guys. Good stuff. That's all for tonight. Thanks for the questions. Good questions. And like I said, next week I will announce a class. I'm going out of town from August 30th through September 12th. So a week from today. I'll be gone 2 weeks. I will have access to the computer and I will be trading.